All right, it's Thursday, and Jim, just like that, the markets are back up.
I was saying yesterday in Real Money, look, the risk is to not buy. That I felt that I wasn't bullish enough, and I was bullish yesterday. And the reason I was because I've been saying over and over again, if you get any blinking Turkey, any blinking China, then you're going to have to scramble. Well, we got both. China trade talks, my old friend Larry Kudlow talked about them. Larry talks very bullish about European trade talks. He also was bullish about NAFTA. Now, I know that Larry's given to being sanguine. He would tell you that. But I do like the narrative that he's telling. And I think that if he's right, I never count this buying up 326 in the Dow, but you're going to feel like you should be looking at things that are down. We're doing a little buying for action alerts. We'll talk about that in our action alerts exclusive video. But I do, and the gains are concentrated in just a couple of stocks in Boeing and Walmart and Cisco. But there is a sense for me that the market got oversold again. The bears came out, and the technicals turned against people. Housing's been weaker. Autos have been weaker, so that all coalesced into thinking that the collapse is finally upon us. I follow my Twitter feed, and the overwhelming statements in Twitter were basically about how can you possibly recommend right into the precipice. And I often say, look, there may be a precipice for certain sectors. I'm more sector-oriented and stock-oriented, but the precipice for others, like a Raytheon, I use that as that's an actual alert name. It's up today. It's case by case, and I look at the stock like Raytheon. It's been down. Is that on the precipice, or did it pass the precipice and now you're climbing back? So that's, I think you see a lot of that in the stock market, and it's like the oils. I think you'll see that. So it's case by case. Stop looking at the Dow. Start thinking about what to pick at during the next swoon.
Yeah, it was interesting to see trade back in the news today because we haven't really talked about it. Also, a lot out of your interview with Elizabeth Warren last night, the senator. Yes. She actually agrees in many ways with what's going on with trade right now.
Yeah, now, there's a couple skeins to the... Look, first of all, there are people who hate me that I put her on, and I think that that's anti-free speech, and I'm not going to go there. There are other people who hate me because of what she said. Now, what I thought she said, that people realize, is that when it comes to the worker, it's very in sync with what President Trump's doing. Now, Bernie Sanders is too on that. These are the extreme positions where she thinks that the worker was sacrificed by some multinationals that wanted China so much. That is not so far from what the trade advisors feel very strongly in Trump's administration. So it was ironic. But what she's also talking about is stakeholders and how it shouldn't just be the shareholders and CEOs that make money, make a lot of money. Let's have the workers come in too. We used to think that's a union position. She's speaking about something different. She wants to legislate it. Now, do I want legislation for it? No, I want the companies to realize, as I said in realmoney.com, that 3 of the best performing stocks of my lifetime, Costco, Domino's Pizza, and Salesforce, share Elizabeth Warren's sentiment and don't need legislation to do exactly what she said.
Yes, and of course, Mark Benioff at Salesforce still with the institution. The other 2 CEOs have retired.
Jim Sinegal's retired, but he said he really set the tenor. And Pat Doyle just retired for Domino's. And remember, more than 90% of the Domino's, it's 96% franchise, more than 90% of the Domino's franchises are run by people who are delivery people, pizza people. And that's empowerment. That's the thing he was most proud of, not the fact that the stock, it started at 10 and finished in the 270s when he retired. I think that Elizabeth Warren is provocative. Let's call her agent provocateur. If you did what she said and you legislated, what would probably happen is we would get inversions. I think that companies would do their best to try to get out of the domicile of the U.S. I also feel that it is highly unlikely it'll get passed because you'd have to have a Republican Congress agree to put through a federal charter, basically, that would make it so that companies have to do far more for the workers, including the board makeup. But she also talks about how if you get stock options, you shouldn't be able to flip the stock, and that's something that a lot of companies embrace. So I guess my bottom line is that Senator Warren has often been perceived as being anti-business, anti-stock market, anti-bank. She is still anti-bank. I just mentioned Wells Fargo yesterday. I brought that up. But this was probably the most pro-business she's been. And remember, this is an article appeared in the Wall Street Journal. I'm sure that people say, Jim, she's running for president. How could you put her on? Look, I put on people who are provocative, who tell an interesting story. And she's a distinguished senator. You may just say she's an undistinguished senator from Massachusetts. I've had a long-standing relationship with her in following what she said. But overall, what I would point out is that she dovetails some with President Trump and dovetails some with Senegal and with Pat Doyle and with Mark Benioff. So before we just dismiss her out of hand, let's listen to her.
And she was right here on the floor of the New York Stock Exchange.
Yes, she was. And I've had many backs and forth. I mean, there were times when I was standing up for the banks against Senator Warren in a vociferous way. Before she was a senator, and there are times when I've embraced her view, particularly with Wells Fargo, where she's thought that the Federal Reserve should be much tougher. Of course, on the way out, Janet Yellen was very tough. It was her last day, and she sanctioned them hard. But there's still been a lot of things at Wells that, and I'm saying by Wells' own admission, they fired another fellow the other day, and by the incredible, more than 100-page report by Sherman Sterling, detailing practices at Wells that were exactly what Elizabeth Warren said. So let's be open-minded enough to listen to the other side. It's very funny because there's a lot of people who say, listen, Jim, you're in the pocket of Kudlow and Trump. And then the people who say I'm in the pocket of Senator Warren. Maybe I'm not in anybody's pocket.
Can't win.
I mean, I'm in a Brioni pocket.
Brioni?
These are from Milan. And I went to Milan and I got a buy one, get one for Brioni. Because at the end of the season, what they do is they burn their clothes rather than have them end up in the channel. So if you go right at the end of the season, you can get bargains for Brioni that go right through the price of Zegna. I'm not saying Men's Warehouse, okay? No crime against Men's Warehouse. But it is incredible. You take a trip to Milan, you leave on the 10 o'clock from Kennedy, United Arab Emirates I recommend. They have both Airbus, they have the A300, but they also have the 787, which of course is a Dreamliner. And you go to Milan, and the bargains in Milan are such that the price of the ticket easily makes it so you're basically buying the stuff at Macy's, which did not have a bad quarter.
Although you once tried to buy a Brioni suit on Amazon live on air,
yeah,
I remember.
Yes, I know.
It didn't work out.
That was ill-advised.
Suboptimal.
Yeah, suboptimal.
Jim, we were talking earlier about the CEOs doing more for stakeholders. Maybe we have to add Doug McMillon to that list because...
McMillon raised wages. That was one of the things he did. He wanted to stop the turnover. Jim Senegal's always preached don't have turnover because it costs so much to have new people. I am impressed. Well, I've been impressed with McMillon for a long time. And, Doug is a guy who... recognized that the stores were not great, that the website was not great. He attacked both aggressively. I was in a terrific Walmart recently in Louisiana on my way to winning the White Trout Award. Won the competition for white trout, not the tarpon. This is for the Tarpon Rodeo, which is the oldest fishing derby in the country. And I had to stop at Walmart to outfit the house. The house was an on-stilled house called the Shonut, right on the beach. So I went to Walmart and I said, okay, I don't really want to be able to outfit a house too much because what'll happen is I can't take everything back. I must have, for $80, I outfitted a house for 4 days. The values at Walmart, if you haven't been to one, I think you'll be blown away. And here's what you're going to come away with. Wait a second. I love Amazon, but these prices, they're incredible. And McMillan has got better service now. The stores are much cleaner, by the way. The people who work there are much more knowledgeable about the stores and what they can, and incredibly helpful. So I think the ethos, I think that the whole kind of aura of Walmart has changed, and I think the values are there. And by the way, Doug has shown you that brick and mortar can be an asset. It's not just a liability. And the Sam's numbers were incredible. Of course, the main store's numbers, best in 10 years. Deserving that the stock's up 10. I don't think you're going to get a pullback. I think you're going to get multiple upgrades tomorrow. When you see a stock up 10, what tends to be happening is people are positioning for the upgrades tomorrow.
Yeah, e-commerce sales up 40%. The website, pretty easy to navigate, so that's paying off as well.
He really changed that website. And by the way, the produce is very good, very fresh. there are so many bargains when you walk into the store. You know that they're selling things through the price that they paid them. That's the old Walmart that I love so much.
Okay, Jim, quite a different situation at JCPenney. The stock is down 27%. No CEO.
No. I mean, JCPenney is the running back by committee, I call it. JCPenney is a company that is really searching for a raison d'etre. They seem to be switching all the time. Are they for women? Are they for millennials? Are they a company that wants to do a house of brands? Are they a company that wants to do just private label? Are they a company that's trying to be mass? Are they a company that's trying to be a little more boutique? No one knows what they are, including the people who run it.
And they're expecting a 2018 adjusted loss of $1 to 80 cents a share.
The balance sheet's nothing to write home about. Remember, Marv Ellison left it to go to Lowe's, and it left it kind of high and dry, but it's really the destruction started a long time ago with Bill Ackman and Ron Johnson. And look, my mom worked at Lids, and my dad worked at Gimbel's. Have you ever heard of those?
That's a good point. Jim, who do you have coming up on Mad Money tonight?
Okay, one of the best barometers of this country is electricity use. And so you go to the largest utility to find out how things are really doing in this country, because you can't, there's no footballing, there's no chest pounding, there's just an objective measure of how much the economy is really doing in terms of using electricity as a gauge. Nick Akins from AEP can do it better than anyone, and AEP has long been my favorite utility to own for those who want safe yield.
Okay, that's tonight, 6 p.m. Eastern on CNBC. Jim and I are going to continue talking about stocks, including NVIDIA, which reports earnings tonight. Join us on our ActionAlertsPlus.com video.